United Healthcare stock is down 48% since its highs a month ago on news that high utilisation rates in their Medicare segment have led them to scrap their 2025 guidance and their CEO resigning due to personal reasons. This has led to the stock to look the cheapest it has been in the past decade according to some metrics. And today we'll be looking at if this is an excellent buying opportunity for this quality compounder that is down on its luck. If you get something out of this video, then don't forget to leave a like and consider subscribing to the channel to help it grow. So United Healthcare is the cheapest it's been in well over 10 years now, according to its fundamentals. But there is reasons for that. So it's a very controversial stock that I'm going to be talking about today. Now, we've had this more recent update. This was just 1 AM yesterday morning, so I've had to revamp my whole video for this. But I wanted to bring it to you guys because I am invested in the stock, even in a small way. So we've got United Healthcare is now under investigation on a criminal probe for possible Medicare fraud. And this is a Wall Street Journal article. They've stated that essentially a criminal investigation into United Healthcare is ongoing for their Medicare segment, Advantage segment. And this is quite concerning. This is something I don't usually involve myself in. Criminal investigations can be quite sticky. They ruin reputations of businesses. Now, United Healthcare have come back with a response. They came back a little under a couple of hours after that and stated, "We are not been notified of any Department of Justice supposed criminal investigation being reported without official attribution in the Wall Street Journal today." And they've actually outed Wall Street Journal for reporting, which is deeply irresponsible, as it seemed it admits the exact nature of potential criminal allegations is unclear. So whether the Wall Street Journal have run with an article that is merely just hearsay, which sometimes can happen, but it is the Wall Street article and people are concerned that this is smoke with a lot of fire, essentially. And we stand by the integrity of our Medicare Advantage program. Now, I like this statement because it came out so quickly, but I don't like the statement because there is a lot of ambiguity around it. It hardly puts to rest the concerns that investors have. Now, the stock did move down quite a bit lower than it did before and now has recovered in that sort of period. It's covered about 4% less. But this is still a very controversial stock that I think people need to consider when you're coming into it, because we've had a lot of different things go on so far with this stock. We've had them lowering their guidance initially in an earnings report, which led to a massive sell-off. We've then had the guidance being scrapped entirely, which led to a massive sell-off. The CEO stepping down, which led to a massive sell-off for personal reasons, supposedly, but now we get a criminal probe. And this is all leading to a massive sell-off in the stock. Now, that doesn't mean that the valuation isn't very attractive and is the lowest and cheapest it's been in years, but it does mean that we should consider whether this is a stock that has a bright future ahead of it. And just before we get into that valuation and concerns surrounding the CEO, my position is now sitting at around 10 shares. I'm down by about 23% or around £660. Obviously, it has come down a bit from that. I did buy back in just before we've got this now new update. So I won't be adding to my position at all until Q2 earnings, despite whatever may happen with the stock. I'm just seeing a lot of smoke at the moment, but I'm not seeing it being reflected in the fundamentals. I'd like to hear from the new CEO as well. I'd like to see his take on this. At the moment, he's distancing himself, not really siding with anything, just keep him to the back. And I'd like to just get UNH get back to what it was doing before, which is being a quiet compounder. Every article I see is either slamming the stock or saying it's undervalued. So I do think there's a lot of controversy around this one, and I'd quite like it to just be out of the way and out of the mindset so that it can carry on doing what it was doing in the past. I think we'll get a lot of downgrades in analyst sentiment now because people are concerned about the criminal probe. And we may get some more certainty surrounding that criminal probe, which may cause movements in the share price. Before we get into the valuation again, there is just a few more things that I want to cover. The United Healthcare CEO stepping down for personal reasons. This has left a bit of a sour taste in my mouth, as it has for others. because if there is a criminal probe into this business, that is something that maybe should have been cited when the CEO stepped down. It leads us down the path of not trusting United Healthcare's management, and my opinion of the management team is slowly changing, and I hope that they can change it back with the changing over of CEO. We've got Andrew Whitty stepping down immediately from his role for personal reasons, and he will be replaced by Stephen Hemsley, which is the chairman of the board and a former CEO from 2006 to 2017. Stephen Hemsley is very good in my opinion, and I hope that he can bring this company back to its former glory. At the moment, we're getting a lot of smoke, and I would like the new CEO to put this to bed. Stephen Hemsley actually owns considerably more stock than Andrew Whitty. He has a lot more skin in the game. He's got a lot more invested in the company. I think his shares amount to over 1 million. So, in my opinion, I hope that this is a good turnaround play and Stephen Hemsley can get this back on track. But we'll have to wait and see. Additionally to this, we've got the most recent buys in past 2 quarters for super investors, and United Healthcare is the third highest there. So we are seeing a lot of people buy into this stock, especially super investors as well. Even with this new criminal investigation, we'll maybe see them buy into this company as well. We'll have to wait and see on that. Finally, this is what I mean by the cheapest valuation it's been in the past 10 years. We can see a 10-year time horizon for their price to earnings, their price to free cash flow, and their free cash flow yield. This is actually outdated and will be slightly higher than these numbers right here when the pre-market opens. United Healthcare has a price to earnings around 12.6 at the moment. This will likely drop down to about 11. And even if they keep that at 2024 levels and then increase it after that, that is very attractive. At the moment, I believe, what's their average? About 22 over the past 10 years, and now they're sitting at around 11 to 12. And it's not been that low in around about, I think it's about 13, 14 years, something like that. So we're actually seeing this one come down massively, and this is either a make or break for the stock. If we believe that the criminal probe is nothing, that the guidance sacrifice is going to go away into 2026 and they're going to sort problems out with the company, this is a great time to be buying this stock. If not, and there is more, this could be another Walgreens situation and we could have a problem on our hands with my holding. Their price to free cash flow now sits around below 11, I would have said, and their free cash flow yield will definitely sit above 9%. This will probably be one of the highest points for their price to free cash flow in the past 10 years, not the lowest. They did have a low point in 2016, around 10 times price to free cash flow, but we could see that number now, at which point this company will look its lowest in the past 10 years for both price to free cash flow and price to earnings. Now move on to trying to value their price to earnings, and I maybe will do a price to free cash flow as well, but right here we're going to look to project out their price to earnings, what they're likely to produce into the future, their growth rate. They have said their growth of EPS is likely to be around about 13 to 16% when they return back to growth. So the company can do that. But with all of this controversy going on, is this something that is going to be possible, especially this year? Probably not. I would say that we're better off factoring in no growth for this year at all, even from the low point of 2024 guidance. Obviously, we've had a big one-time payment in the form of a cyber attack, and this is just another thing that is added onto the problems with this stock. But I would say that that was a one-time payment. That is very unlikely to be the case again, even with this criminal probe being in the works maybe. So I would say that at this point, a better factor in no growth for 2025 and then growth after that point that is gradual to going back to the low point of their guidance of 13%. And I'm just going to lowball it entirely just to show how a bear case might work out for their price to earnings. So we've got a 5-year projected growth rate at 6.5% growth rate. This would be amounting to around about an 8% sort of EPS growth rate with no growth in 2025 essentially. We've got a dividend growth rate of 14%. I'll lower that down to around about 10%. And a price ratio of 17 times when their average over the past 5 years has sat close to 24 and 22. If all of that comes true, then we have a CAGR for this stock, a fair value of $383 per share, and a CAGR of about 14.9% from today's share price, which is actually going to be considerably lower. The CAGR is probably closer to about 16% on the bear case. That is with them returning back to EPS growth after 2026 and with a very conservative EPS growth rate. Now let's talk about the bull case of EPS. Let's say they get back to EPS growth of 13% by 2026 and maintain that throughout. So let's say they get to around about 11.5% EPS growth. This is with factoring in 2025, no growth, and then 13% onwards from that point for the next 5 years in EPS growth. Shares outstanding is already taken care of in the form of EPS, 10% growth rate in dividend growth rate, and we give a price ratio because they've managed to get back to the highs that they are already at. Then we've got a price ratio of 20 times in PE. Still under the 5-year average, we get a CAGR of 23% for this stock and a fair value of $551 per share. And even if we look at the free cash flow perspective on this business and say they're going to grow their free cash flow by 6% and we give them a price ratio of around 16 because that's what's been cited in the past as being quite undervalued, we get a CAGR of 15% and a fair value of $390. There's lots of different metrics around there, but we've done 3 different valuations, both on free cash flow, a bear case for EPS, and of course a bull case on EPS. And we are seeing that in every case, this stock is undervalued. However, there is concern surrounding the business, and I'm not one to downplay them. There is potentially a criminal investigation probe ongoing. There has been hacking into the business before, which has led to a one-off massive payment of over £1 billion. The CEO has stepped down, a new CEO's in, guidance has been completely scrapped. This is not for the faint-hearted as an investor. But I do believe I will continue to hold my position until Q2 and reevaluate my position when I hear from the new CEO and sort of address some of these concerns maybe that the market has and this level of uncertainty we're seeing with this stock. But what do you guys think? Do you like this one? Let me know down below. And as always, thanks for watching and I'll catch you in the next one.